Before I ask you what you think and how you think the economy is, how are you?
Very good, thank you. Good to be here.
Very nice to see you. Okay, let's get an assessment of the economy. Since the last time we talked, can't remember the last time, we've seen massive downgrades.
Yes.
A lot of downgrades. I know there's a quarter left. Do you think, though, the economy's bottomed at this point?
Sorry.
I'm a lot less confident than my peers. Well, reason being, the economy is still being held hostage by COVID and also by the property curbs. People are not buying properties at all. And so, because of that, any forecast, based on the vagaries of COVID control is basically groundless, in my view. So, so I think the base case should be that, the COVID control would continue for some time, even after the big meeting in October. And I think that would put downward pressure and, more importantly, put uncertainties into the system. It makes it very difficult for people to anchor their expectation going forward.
What are your expectations for the Party Congress, right? I think there's a growing sense that something's going to change with COVID-0. Is that too hopeful?
Yeah, I would say it's wishful thinking in the sense that, if they really want to relax the control, they can relax much earlier than this, right? So they shouldn't be using, no one should be using the big meeting as a sort of a watershed event. So it is a meeting of continuation and also consolidation, and also the senior leaders of China is out of the country already. And I think that is the first time in, I don't know, in my memory ever, they went out of the country for a national visit before this kind of big meetings.
Okay, I guess one last thing on COVID-0. Why do you think they're sticking with it, and why do you think they'll continue to stick with it? Because you answered that question, you get almost everything else correctly, right, as far as economic policy?
That's right. It's hard to say, right? So my guess is as good as anybody else's guess. But I would say that, because the...
Or why the conservative approach when it comes to COVID? Let's phrase it.
Well, because 99% of the Chinese population hasn't contracted COVID. Right? So people probably not as immune as they should be at this stage. So even though the COVID virus has mutated, to a weaker form, but it's hard to sort of, be certain, what kind of effect it had on the Chinese population.
There has been some debate on what if China is actually entering into some sort of recession. What would a recession in China look like? Are there parts of the economy that are already in a recession, you think?
I think it's a growth rate recession, in the sense that, you're seeing growth rate of Chinese GDP coming down. All right? So already in the first and second quarter, especially in the second quarter, it's very, very close to zero. So, because of the lockdown and also because of, weather problem and power shortage problem. So I would say that, some sectors are clearly in recession, for example, property sector, right? So property investment is down over 7% year on year, and it's still decelerating. The retail sector is obviously in recession as well. People are not spending, people are rushing to pay off mortgage, and people are rushing to save. So the increase of banking deposits in the banking system, has been, one of the fastest in recent years. So, all of this is saying that, yes, some part of the Chinese economy is clearly in recession, but then some other parts are doing okay. For example, Chinese exports has been very, very strong, and I think that surprised everybody in the market. And also the Chinese manufacturing sector seems to be holding up very well to make Chinese products to export to the foreign countries.
Well, speaking of exports, a weaker currency helps you do that. What do you make of the weak currency now? I mean, it's weak against the dollar. It's not as weak against the basket, for example. Do you think there's a line in the sand? What more do you think authorities can and will do?
Well, the line in the sand used to be 7, right? So now that
that's gone.
It's broken. It's broken. So the next stop is 7.2. No one should be surprised by the weakness in the yuan, because fundamentally speaking, the economic growth is slowing down. So even though this year, for example, we have a record trade surplus, and yet for some reason the Chinese forex reserve is not building up. Right, so that's putting pressure on the Chinese yuan, and also, because of the divergence of monetary policy between China and the U.S., that is also putting pressure on the Chinese yuan as well. So the PBOC has a easing bias, while the Fed is continuing to hike very rapidly. So all of those is saying that the pressure on the yuan would continue.
What do you think that, at least when it comes to the renminbi, what are policymakers most uncomfortable with?
At this stage?
Yeah.
Pace?
Level?
There's so many things that is, most people are not comfortable, but then for some reason they are unwilling, for example, to relax the COVID control. So because the effect on the population is unknown. So, if the Fed hike too aggressively, for example, then the foreign demand will continue to shrink. Then it will put even further pressure on the Chinese exports, which has been holding up the Chinese economy so far this year.
Yeah.
So that is probably one of the few sectors that is still growing this year. And also the property sector. I think it's sort of like a slow train wreck that is happening, right? So property investment is down, property sales is down. So going into August, for example, the high frequency data is showing that, in many of the Chinese cities, property sales is down, especially in the top 30 Chinese developers. We're seeing slowing property sales across the board. And so that has effect on the upstream and downstream of the property sector, and also have a huge impact on Chinese consumption.
Is in terms of how the market prices the slowdown in the property sector, the train wreck, as you describe it, do you think if we priced that in already, though? I mean, everything from credit to price to book. What I'm trying to get to is, we know it's a slowing story, but what else have we not seen?
Yeah, it has been cheap for a year, right? So I think late last year, when we forecast a slowdown and also a correction in the market, no one wants to believe us, right? So it happened. It broke the 3,000 level earlier this year. So I would say that it is cheap. Right, so but cheap is not the reason to buy, and also is it cheap enough? So if you look at the market implied risk premium and compare to the levels in the history, right, so it's still higher than 2012 when the U.S. temporarily starting the tightening campaign, and also it's actually not as cheap as 2016 after the 5,000 point stock market bubble crash. So I would say, yeah, it is cheap, but it has been cheap for a year, and cheap is not a good enough reason to buy.
So I guess we've been asking all our guests this: where do you hide, right, ahead of the Fed this week, among many central banks, among China? Where can you hide?
Globally, I mean, when there's global risk, that is still rising, right? So it's hard for us to recommend clients to, go into the market and, just close your eyes and buy and be courageous and catch the falling knives. It's hard to make that kind of recommendation. But normally when, in such an environment, in a risk-averse environment, then we tend to see the US dollar rising. The VIX, the market implied volatility rising, and emerging market currency weakening, and also maybe some of the, for example, the Chinese bond, because the PBOC is still easing, so the bond yield, the Chinese bond yield may make all-time low at some stage.